This is VoxCrest Report. I'm Daniel. Today, global markets jolted after fresh United States-Europe tariff threats reignited fears of a wider trade escalation tied to the Greenland dispute. Reports say President Donald Trump threatened new tariffs on imports from 8 European countries. Coverage describes a tariff starting at 10% on February 1st with a possible increase later in the year. Markets move fast because trade headlines create uncertainty about corporate costs, supply chains, and export demand. When investors cannot confidently price earnings, volatility rises quickly. In Europe, major indexes fell at the open. Reports highlighted declines across Germany and France, and a smaller drop in the United Kingdom. Some coverage pointed to automakers as notable losers, a common pattern when trade tensions rise because autos rely heavily on cross-border supply chains and exports. In the United States, stock futures slipped. With the cash market closed for Martin Luther King Day, much of the immediate reaction showed up in futures and overseas trading. At the same time, investors rotated into safe havens. Gold and silver climbed on risk-off demand, with reports saying both metals hit record highs. The dollar also softened against traditional haven currencies like the Swiss franc and the Japanese yen as traders reduced risk exposure. Oil prices dipped modestly in the broader risk-off mood, reflecting concerns that trade friction can slow growth and weaken demand. Behind-the-scenes markets are also reacting to Europe's response. Reporting says European leaders are discussing strong retaliation tools, including the European Union anti-coercion instrument. That matters because markets tend to fear the second step more than the first. Once retaliation becomes likely, the range of economic outcomes expands and pricing becomes more unstable. You're listening to VoxCrest Report. Subscribe for fast updates, and I'll see you in the next report.